Good evening, everyone. We have 11 participants. Um, s- Guys, since we start this session, it is recommended that we switch on the camera and try to make it as interactive as possible. It is recommended that we all start our camera. This has to be an interactive session where everyone speaks. That's the point of having a live session so that we get to know as much as possible and we learn all from each other. So we are going to do CFA foundation course. This is not like there is going to be a sixth session, and CFA level one itself is very huge. It cannot be covered only in just six session. That is why we have just created this foundation course so that you get to know what exactly is CFA all about, how what will be the material, what will be the structure. You get more accustomed or more used to the CFA rigorous training sessions. Okay, guys. Have any one of you have registered for CFA level one exams?
No,
My,
sir.
okay. Uh, just a moment. My voice is clear, right?
Yes, sir, you're audible.
Is it clear now also? I just remove the speaker because anyways the voice was audible. My voice is audible, right? Can anyone speak up?
Yes, yes.
Yes, sir. You're audible.
So, are you guys attending my session for the first time? Have you attended any of my other session, financial modeling or financial mathematics?
This is our first session, sir, with
Great.
you.
So let's, before we start the session, in 5 minutes, quickly, let's introduce ourselves. My name is Nikhil Jain. Qualification wise, I'm a chartered financial analyst. I worked for two investment banks, Morgan Stanley and Deutsche Bank. First, I worked in Deutsche Bank and then I worked in Morgan Stanley. And I worked for two rating agency. One is ICRA, another is CRISIL. Qualification wise, I'm chartered financial analyst. And yeah, that's about me. All of you, all rest of us, quickly just give a short summary of you. What have you done? What have you studied and whether you have any experience or not? Deovrat, we can start with you.
My name is Devra. Okay, I am a 51-year-old year fellow. Means technically I was working, but then now I have done CFP. I'm looking at CFA from the perspective of gathering, say, high net worth so that client, so that it helps me.
Right.
So don't know whether job is right or wrong, but at least for my development and increasing my portfolio size, so that's what I'm looking at. From
Okay.
that perspective, I'm doing that.
You are a practicing CFP, as in you.
Yes, I am. I already have a portfolio done. I'm handling people, helping them to build portfolios.
Okay.
So got around about 4 to 5 crores of portfolio on the mutual fund side. Shares also around about 15-20 lakhs. And fixed income also around 1 lakh or something, which I recently started.
Okay.
So trying to take it ahead. So if I want to talk to good people or say some high net worth people, you can say need to be good on analysis. So from that perspective, trying to look at it. I don't know whether I will or I don't know about that. So
It's
I'm trying
going
to
to
take it
be
ahead.
it's going to be very helpful. I've know many CFPs who have done CFAs who later on, and it has helped them in their marketing also and in their client interaction also. So it's going to be a very I myself had did CFP and after that I have did my CFA.
Okay, okay.
Yeah. So yeah.
Background is I was a MBA finance working in corporates for around about 20-25 years. Looking
Hmm.
at the financial side, means raising funds, rating agents, all that stuff. So let's see how it works now. That's the only thing.
Great. Great.
Okay. Yeah.
Next.
Thanks.
Thanks. Your one thing, your previous background of CFP, all the time value of money and whatever you have studied is going to be helpful, especially in your level one exams, if you give a level one exam.
Okay, okay.
Yeah. Chetan,
Hi sir.
hello.
Hello sir.
Yes, can you give a brief introduction about yourself?
सर अभी तो मैं सीए इंटर पे परस्यू कर रहा हूँ इंटरमीडिएट
Okay,
और
okay,
इसके साथ मैं अभी रिलीगर ब्रोकिंग में एज ए रिलेशनशिप मैनेजर वर्क करता हूँ।
okay,
वहाँ सर मेरे अंडर एक 100 से 200 क्लाइंट है। उनका मैं डेली ट्रेड एग्जीक्यूट करता हूँ और उनको पोर्टफोलियो भी बना के देता हूँ उनको जैसा उनका रिक्वायरमेंट होगा। और अभी तो मैं आईटी और एफएमसीजी दो सेक्टर में ट्रैक कर रहा हूँ अभी
right.
इन वर्किंग में सर।
Great, great. Next, nice, Chetan. Next, देवर कल्याण, आपको आपका नाम दिख रहा है, राइट? यू कैन गाइस, यू कैन सी योर नेम इन द बॉक्स, राइट? So whoever is coming next, please quickly introduce yourself and we'll start with the session then.
Yeah, hi sir, good evening. So yeah, I recently completed my undergraduation in BBA in the finance specialization. So I'm quite interested towards analysis and investment part. So that is the reason I chose to join this session. And as of now, I'm just in a stage of gaining all the knowledge and learning stuff, sir.
Good.
So yeah, and currently I'm working in Uni Scholars, which is totally into education sector.
Okay.
Yeah,
Nice.
so I'm working as an associate counselor over there.
Nice. Next.
Thank you, sir.
Thank you. Ketan.
Hello. Good evening, everyone. Myself, Ketan Bhosle. Talking about my qualification, I have completed my graduation in BCom from CHM College. I have completed my post-graduation diploma in management from Guru Nanak Institute of Management Studies in BFSI sector, that is banking, finance, and insurance. Apart from that, I have completed certain NISM certifications like NISM 5A mutual fund, NISM 7 security operations risk management, NISM 8 equity derivatives, and NISM 15 research analyst. I have also completed financial modeling course from Mentomy Careers itself.
Nice.
I'm currently working in Morningstar.
Oh, morning, sir.
That's
So
all about myself.
where are you based?
Mumbai.
Great.
Just located to the relocated to Koper Khairane, Navi
Okay,
Mumbai.
okay. Okay. So Morningstar is also in Koper Kirane only?
No, Vashi. Two
Vashi.
stations. Two stations
Okay.
after Koper Khairane.
Yeah, yeah. Understood. Next. Manoj. Nalin, Navya, Shubhanagar, and Johan. Quickly introduce yourself.
Good evening, sir. I'm Nalin Tripathi.
Yeah, hi,
Sir,
Nalin.
I'm Nalin Tripathi. Can you hear me?
Yes, we can hear you. Yes, Nalin.
Sir, I'm currently studying in my eighth semester. Sir, I'm currently studying in my eighth semester. I'm a BLLB honors student. I am studying. I've decided to pursue CFA because I have a keen interest in corporate law, and that's what we are studying these days about finance, about the distribution of shares among the company during various mergers and acquisitions. So, CFA was something I thought that would help me in targeting the level tier one law firms such as KPMG or McKinsey.
Nice, nice. We have, so you have a law student, right? It's good to
Yes,
have
sir.
from different background.
Yeah.
Good. Nice to have,
Sorry, sir. Sorry,
it's
sir.
nice to have people from different background also, law people also in the seminar, in the lecture.
Okay, thank you, sir.
Yeah.
Thank you, sir.
Next.
Hi, my
Hi,
name is Yo. Sorry, go ahead.
hi, I'm Navya. I have completed my CA Inter and Articleship. I am presently working for State Street as an A2 in financial reporting.
Okay. So FSA will be, Navya, for you, it will be cakewalk because you have done your intern CA. So next, other like CA people are more accustomed to financial statement analysis in CFA. But where they want help is they want help in fixed income derivatives, and those subjects you would require. It will be more helpful for you. So first session will be a cakewalk for you, I believe. This session.
Okay. So the level one would be easier.
Level
This
one, no,
one.
I'm saying FSA would be easier.
Okay.
On where CA students find difficult for CFA is they find it very difficult. Generally, FSA is very easy for them. Where they find difficulty is they find difficulty in fixed income, derivatives, equity valuation. These are the subjects. Mostly they quantitative analysis. That's where they face problem. That is what I feedback which I have received because I've taught many CA students also CFA. And for them, FSA is very easy, but for them, other subjects they find it difficult. And in CFA, there is no taxation because it's a global certification. So you cannot have taxation. In CA, you can study tax. In CFA, there is hardly any taxation. So that's a major difference. Yeah, next.
Okay.
Yeah, hi, my name is Johan, and I am a hospitality and tourism management background. I used to work in hotels, and now currently I'm working in facilities, which my client currently is Barclays Bank. So I'm around a lot of people who are, CFAs and CAs, and I have like a lot of interest in the stock market.
Okay,
I'm not
nice.
really sure because I don't have a background in finance. So I'm just trying to figure out whether I can pick up or I can, learn.
Finally, you are in the right course. It's a foundation, CFA level one foundation course. So you will get to know about if you're interested in finance, it's nice for you to be a part of this session.
Okay. So even if a person has no finance background, like how difficult will it be for a
There are
person
many,
without?
there are many engineers who do CFA, so they have no finance background. So
Okay.
but it is doable. It is little difficult, but it is doable. Where
Okay.
engineers score is that where engineers have a upper advantages, they have upper advantage in quantitative analysis. They understand quantitative analysis better than CA or finance students. CA finance students they have advantage in financial statement analysis. But people from various background, if you have a graduation degree, you can if you're if eligibility for CFA now is I think first year junior college. In my time it was last year junior college. So you can apply for the exams. One of my students was in zoology, and she completed CFA, and I think she is in one of the leading rating agencies of India. So yeah, you can do it if you want to, if you have passion about it. If you're passionate about it, you will be able to clear through the exams.
Okay. Thank you.
Thank you. Anyone left?
Hello, sir. This is Manoj.
Yeah, hi Manoj.
I've done my post graduation in MBA Finance and Marketing,
Okay,
and I've been I haven't went to job for 2 years due to some family problems. That is where like uh, I joined in Mentor Me financial modeling course. I've completed that. Currently, I'm looking for placements, and I have interest in CFA. That is why I joined this webinar, sir. Like to gain some knowledge. What is CFA all about?
nice.
Yes,
Uh,
sir.
I'll share my screen now. So today we are going to understand financial statement analysis. So you guys can see my screen, right?
Yes.
Yeah. Uh, See, you suppose you have started a company, you have set up a company, you started your own startup and you set it up, but you do not want to run the company on a day-to-day perspective. You probably have some other things to do. So you don't want to be in day-to-day management of the company, but you have started the setup. You have put in the capital. It was your idea. You started one company, say it's a tourism company, and you have done the setup. but you do not want to be in the day-to-day operation of the company. So, but since you have put in the capital, you want to know how the company is doing after every 3 months, after every 6 months. What is the profit the company is earning, whether the revenues are growing or not, whether the expenditure are in check or not, how the company is shaping up. So what is the best way for you to check how the company is doing? The best way for you to check how the company is doing is you going through the financial statements of the company. You going through the profit and loss. You can go to the balance sheet. You can go through the cash flow statement. We are going to study about all these three in depth in the later on slides. What are the uses of all these things? And you will be able to judge, right, whether the company is doing well or not. Suppose you are an investor, there are so many people who are interested in stock market. You want to know whether you want to invest in a company or not. If you want to invest in a company or not, first you need to check whether the company is doing good or not. The best way to check is going to the financial statements of the company. Today also we will go through financial statement of a company, actual financial statement of a company, and we will see how what we are studying theoretically, whether practically also the same thing we are able to see or not, whether we are able to relate it or not. So you will see, right, the balance sheet of the company, how the company is doing. You will see the profit and loss statement of the company to check whether the company is making profit or not. If this is from an equity investor perspective, think from a lender perspective. If you are a lender, if you are a banker, and if a company comes and asks for a loan, the first thing they will do is they will ask for your balance sheet and income statement audited. They will see how much profit are you earning, what is your business operations, what is the current loan level, whether you will be able to pay my loan or not. Bank will check, right? Obviously, if any one of you have seen, even at a personal level, if I want to take loan, first thing bank asks is whether show me your salary slip. If you have business, show me your income statement, show me your returns which you have filed. If you have a proprietorship firm, tell me what business are you doing, whether you are making profit or not. They will ask, right? So at the end of the day, any investor, your businessman himself, if he wants to know, every day you are buying goods, every day, or if you're in a trading business, every day you are buying goods, every day you're selling goods. At the end of the year, you want to know, right? I've done business for whole 1 year. I want to know what have I done, whether I've earned profit or not, whether it is worth it or not. There are people who do business, and when you ask them what is the profit, they'll say roughly around this much. Arey, roughly, why roughly? It's your business. You should know, right? How much money you have earned. What is your profit? Um, think from investor perspective also. If you're equity investors, the best way to do equity analysis is first thing you should do is understand go to the financial statements of the company. Third is cash flow state. So yeah, sorry. First is for your own self. Second is for equity investor. Third is if you are a banker and if you want to lend money, if if you want to lend money to the company, you will go through the financial statements of the company, right? Because in financial statements, besides profit and loss, balance sheet, and cash flow statement, we are going to study all three of them thoroughly: profit and loss, balance sheet, and cash flow. All three will study thoroughly. Besides these three things, there are other things also in the annual statements, which is very helpful for all three of them. Be equity investor, be the lender, or be yourself. I mean, if you want to, yeah, there is another thing. See, if there's one person who said that he's working in tourism industry. So if he has a company, say he has a tourism company, and he wants to check how are the other tourist companies are doing. How is Mahindra Holidays doing? Uh, what Club Mahindra is doing? Club Mahindra is listed. He can go through the annual report and see whether they are making profit or not. And he can join the dots, right? If they are earning profit, why am I not earning profit? Even I should be earning profit. We are in the same industry. What is he doing differently that he is earning profit? So it is helpful for them also. If you want to understand about any industry, it is very helpful. Financial statement analysis, financial statements are very helpful. If I wanted to invest in tech company, so I will go through Microsoft annual reports and I will see what are their plans, how are their numbers looking, whether the numbers are growing or not. So that is the objective of financial statement analysis. Any question till now?
No, sir.
So the first financial statement which we are going to study is income statement. Income statement is very simple. In income statement, all the revenues and all the expenses of central operation and peripheral operations both are recorded. Central operations, what are central operations? Central operations are the core operations of the company. I mean, if a company is in the business of say retail store, it is in the say chroma type, no, not chroma. Say if a company is in the business of say uh, Zara company, which is in the fashion, it is in the business of selling clothes, fashion clothes. It's in the fashion business, yeah. So its central operation is selling, buying cloth material, I mean buying fashion items and selling it in their retail store. That is their central operations. Understood? The operations which is core to their business. Now for Zara company, their core business is selling fashion items. That is their core revenue will be that thing. Whatever revenue they generate from selling say jackets, clothes, jeans, shirt, whatever, any type of fabric. And their expense will be central expense will be salaries for the staff who are working in the store. Their expense will be light, electricity bill of the retail store, rent of the retail store, etc., etc. Their purchasing department, they have to purchase also, right? Clothes. So if they're purchasing clothes from vendor, that will be the expenditure. So that is their core expenditure. Are you understanding, guys? What will be the core expenditure of the company? Central operations here, which are directly related to their business. So there is revenues and there are obviously the company will be earning revenues and obviously the company will be incurring expenditure from their central operations. Now, besides their central operations, continuing with a similar example, suppose Zara started a core in one location of Mumbai and they bought that store for say 1 CR. They bought a store in Mumbai location and they bought the store in 1 CR. But after 3 years, they realized that the store location is not optimal. There is not much good footfall in this store. So they say, let's do one thing. Let's close this store. Let's sell this store and we'll buy and we'll sell the store. So when they bought it 4 years back, 1 CR was the cost. And now they are going to sell it at 1.2 CR. So they have earned a profit of 20 lakhs, right? This they sold it for 1.2 crore, and 4 years back they had bought the store for 1 crore. Now this is not their central operation, right? Their Zara is not in the business of buying and selling store. It is in the business of buying and selling clothes. So this revenue, this gains or losses has to be shown separately, this 20 lakhs. It should not be, if it is clubbed in the central operation, I will be, as an investor, I will think that they have made a profit of 20 lakhs in buying and selling clothes. No, they have not. That is not their central operation. This is a one-time peripheral operations. This is not going to be recurring. This is not core to their business. This is not their strength. They are not in the business of buying or selling stores. Understood? So understood the concept of central and peripheral operation?
Yes, sir.
So that this we are going to study. This is like we are skimming through income statement. This is what a normal income statement looks like. This sales minus expenses. Expenses are divided. This is the sale. This is the main revenue. From a Zara perspective, this is the revenue they have earned from their retail store. Now, cost of goods sold. They have probably bought that cloth material from a vendor. So this is the cost of goods sold. So this will be the cost of goods sold. Obviously, in Zara case, it is not a factory, but it will be wages. Wages. There will be no wages, but there will be salaries of staff working in the mall. So obviously there will be 5,000. There will be in Zara counter there you will see a lot of machineries. You will see computers. You will see a lot of assets, and those assets we'll study depreciation later. So this is a crude way. This is the income statement. We will go through income statement, but I just wanted to tell you that these are the sorry all the ce- central revenues. Core operation revenues are recorded over here, but see, gain from sale of land. This is income from continued operation. This is shown separately. This company is not in the business of buying or selling land because it is in the business of some manufacturing business because it has wages also as their expenditure. But for the year 2008, they made a gain from sale of land. So this is peripheral operation which needs to be shown separately. We'll study income statement later. But just wanted to touch upon the concept of central and peripheral operations. Now, balance sheet. What is the information which will be there in balance sheet? Anyone has any idea? See, income statement has all the revenues and expenditure, but balance sheet will have all the asset and liabilities. Okay. Assets are those. So if you want to know whether the company has done good or not for the year, let's take an example. How when you will give a lot of importance to balance sheet and when you give a lot of importance to income statement. If I want to know how a company has done in this one year, say the financial year starts at suppose the financial year starts at 1st Jan and ends at 31st December, and I want to see in 2023 how the company has done in 2023. What are their revenue? What are their expenditure? What how profitable the company was in the year 2023. So if I want to see how profitable the company was in 2023, I will look at income statement. I will give a lot of importance to income statement. If I want a snapshot of the company, what the company had, the company started, the company may have started in 1990. But for the year 2002, I'm not concerned what the company has done in 1990, 91, 92. I'm not concerned about it. I'm only concerned about 2023. So I will give a lot of importance to income statement. What is the gain? What is the losses, etc., etc. Now, what balance sheet does? This is income statement. Balance sheet shows the financial position of the company on 31st December 2023. What is the financial position of the company? It is not only taking 2003 in 2023 into consideration. It is taking consideration of all the past thing also. If the company has taken loan 4 years back and the loan is still sitting in the book, I will get to see it in liabilities section, because in liabilities I get to see all the loans which I have taken. If company has bought a machinery, if Reliance bought a machinery in Jamnagar in many years back, it will probably still be sitting in the books of Reliance. It will be in the asset because that plant and machinery is carrying value. It is still delivering, it is still processing petrochemicals, it is still helpful, it is still useful for the company. Why it is useful for Reliance? Because of that plant and machinery, Reliance is still earning money. That plant and machinery is still processing petrochemicals. So assets are those items which are going to give you economic benefits. So if I want to see the assets of the company, what is the plant, how much how much plants do they have, what is the fixed assets they have, what is the current, what is the amount of inventory they have, all this will be covered in assets. In balance sheet, I will not get to see the income and expenditure. I will get to see assets and liabilities. So how much, if I, from a banker perspective, if I want to see whether what is the loan company has already taken, I will get to see in liabilities. All current assets, even I will not only get to see long-term assets or long-term liabilities, even the short-term assets and short-term liabilities, I will get to see over here. So if I have inventory, even what is assets? Assets are those things which gives you economic benefits, which puts cash in your pocket. So obviously there are assets like plant and machinery, long term, which is going to give you, which are going to give you economic benefits in long term for say 10 years, 15 years. If I start a factory, it is going to give me economic benefits for 10 years. But there are short term assets also. Like if you have inventory, even that is going to give you, right? Even that itself is going to give you money. When you sell your inventory, you are going to get economic benefits. You are going to earn profit. Cash itself is an asset. This is a long-term asset. Inventory is a short-term asset. Cash is a short-term asset. If I have sold goods and I have not received debt and I have not received my cash, that means it's a receivable. I'm going to touch upon the concept of debtors or receivables. Suppose I have sold goods. I have sold goods for 10,000, but I have not received cash. So in my book of accounts, I will show debtors, right? Because I have not received cash. I will say debtors, I am going to receive money. Since I'm going to receive money from my debtors, it's an asset, it's a short-term asset for me. So all these things will be there in balance sheet. Any confusion, guys? Non-finance background? Any confusion?
No.
Liabilities, again, liabilities will also be divided into long term and short term. Long term liability, if you've taken a long term loan for 5 years, 15 years, it's a liability, right? Because why is it a liability? Because money will come out of your pocket. It's an economic cost. You will be giving money in future because of this item, because of loan. So it's a liability. Anything which takes money out of your pocket, you can think of it as liability. This is a long-term liability. There can be other liability also. Suppose you have purchased good and you have purchased it on credit. Since you have purchased it on credit, you have a creditor now. You have a payable. You have to pay someone. You can say payable also, or you can say creditor also. Mostly people use payables now, not creditors. Since you have to pay someone, it will be a liability. So it will be there in your balance sheet as liability because you have, but this is long term in nature and this will be short term in nature because you have to pay someone in a couple of months, 2 3 months. So these are different types of, majorly these are two type of liabilities. We will study liability more thoroughly when we go ahead. Now, the basic, very importantly for non-finance student also, this equation will always stand to true. Asset is equal to liabilities plus equities. Think of this formula as you are buying a mobile. If you are buying a mobile of 20,000, it's an asset for you. right? It's going to give you benefit for 2-3 years. You are going to learn from it. You're going to access social media. You're going to watch video, stream movies, etc., etc. So it's going to be helpful in your studies also, in your research also, etc., etc. So you have bought this asset. How do you, how have you bought this asset? There are only two ways you could have bought it. Either you have used your own money. If you have used your own money means the money which, if you have put your own money in business, that money is called equity. So either you have funded that asset through your own money, or you have funded that asset through somebody else's money. You have taken a loan. In that case, either you have taken that asset through equity or you have taken that asset from liability. There are only two ways you could fund an asset, either through your own money or someone else's money. So this equation will always hold true. Asset is equal to liabilities plus owner equity. Whatever transaction happens, whatever transaction, a petty transaction like you buy office supplies, you buy calculator for your office, or you buy stationery for your office. When you do this transaction, this equation will hold true. You take a loan, this equation again will hold true. You pay back that loan, this equation will again hold true. Whatever transaction you do, this equation will always remains true. Your left hand side will be your equal to your right hand side. Left hand side is asset, right hand side is liabilities plus owner's equity. We are going to go through a couple of transactions and we will show you how this equation remains true every time. Going ahead, we have studied income statement, we have studied balance sheet. Can any of the finance students tell me, those who have studied, what is there in cash flow statement, which is different from income statement?
May I?
Yes, yes, please.
So in income statement, we take depreciation, we reduce depreciation, but actually the depreciation not the like expense. We are not actually putting out the cash. So it should be added back to the like cash. So cash flow statements says that how much cash we actually hold in our hand. So that is the
Perfect.
cash flow.
Yeah. So what you've said is correct. One of the reasons,
So,
yeah, tell me.
income statement and balance sheet are prepared on accrual basis, and cash
Yeah,
statement is based on cash basis.
very nice. This is the, besides non-cash expense, which depreciation, which the person spoke about, the other major thing, which is the major thing between income statement and cash flow statement, is accrual basis of accounting. What is accrual basis of accounting? I will just tell you. In your income statement, you record your revenues and expenditure. Suppose you start a pen manufacturing business, okay? And you have sold 20 pens at the price of 100. So you will record a revenue of 2000. This is the revenue you have record in your income statement. Now 2000 doesn't mean 2000 rupees have come to your account. That does not mean you have record revenue. You will record revenue as soon as you sell the item. Whether you have received the cash or not, that doesn't matter. Suppose you sold this 20 pen at 100 rupees, but you have received payment of only 15 pence. So you will receive cash of 1500. That for 5 pen, the person will pay you later after 2 months. Now in income statement, we follow accrual basis of accounting. Whether the cash has been received or not, that doesn't matter. In my income statement, I will record 2000. But if you look into my cash flow statement will only say 1,500. It will not say 2,000. Similarly, expenditure. Suppose you are in the pen trading business and you purchase those pen at 50 rupees. So your expense will be 1,000. But out of this 20 pence, you actually have paid to your supplier for only 10 pence. If you have paid for only 10 pence, your cash revenue will be 1,000 and your cash expenditure, sorry guys, now your expenditure is 50 rupees, right? So your revenue minus expenditure is 2,000 minus 1,000. 1,000 is your profit, but your cash profit will be how much? You will say, I have only received money for 15 pence and I have only paid expenses of 15 pence. How much is 15 into 50? 750, right? So my profit over here will be, cash profit will be different. My cash profit will be 750. Whereas in cash flow statement, I will show cash flow of 750, but my revenue will be 1,000 rupees. Okay, guys. Even if I have not received the money, I will still record the revenues. Even if I have not paid, I will still record the expenditure in my income statement. But in a cash flow statement, your actual cash inflow and your actual cash outflow is recorded. Any confusion, guys? I can repeat it again if there is any confusion.
Please repeat it
No.
once again, sir.
In your income statement, this is how will you report. You have sold 100 pence at the price of, what was the price which I said earlier? I don't remember.
15.
20 pence at the price of 100, I think.
Sorry. You sold 20 pence at the price of 100 rupees. So what will be your revenue? 2,000. Agreed? In your cash flow statement, you will not record 2,000 as revenue, cash revenue. You will record, you have sold 20 pence, but you have received money only for 15 pence. 5 pence, you have still not received money. So in your cash flow, you will record 15 into 100, 1,500. Understood? When we do prepare income statement, when we record revenue, we follow accrual basis of accounting. In accrual basis of accounting, whether you have received cash or not, that doesn't matter. You have sold the item, you will record the revenue. In cash flow statement, the actual cash inflow is recorded. Though you have sold 20 pence, but you have received payment for only 15 pence. That 5 pen payment is still pending. That will be in your debtors, which will be in part of balance sheet. In balance sheet, we mentioned debtors also, right? If you are supposed to receive payment. So forget about this thing right now, but just one thing to remember. In your income statement, you will record revenue. Whether you have received the cash or not, that doesn't matter. If you have sold the item, you will record the revenues. In cash flow statement, you will record the actual cash inflow, actual cash outflow. Okay, understood?
Yes, sir.
Your cash flow is also divided into three categories. Cash flow from operating. Just a moment, guys. See, obviously there will be, if you have started a business, there will be cash inflows, there will be cash outflows. But it is very important to categorize these cash inflows and cash outflows. One is operating cash flows. Those cash which is coming in and going out because of day-to-day core operations. If you have sold goods, if you have sold, uh, if you have sold goods, if you have purchased item, anything which relates to your core business. Again, going back to Zara example, if Zara has purchased goods, cloth material, and if it has collected revenue from cash sales on its counter in its store, all this cash inflow and cash outflow, which is related to core business operation, will be operating cash flows. A lot of time there is investment cash flows also. Suppose you have started a company, you started a factory, and you started a factory of pen manufacturing. And so whatever revenue you earn from selling pen, whatever expenditure is there in manufacturing on those pen will be part of operating cash flows. But now you want to set up another factory. If you're starting another factory, there will be a huge cash outflow. But that huge cash outflow is not because of day-to-day operation. It is because of one-time thing, right? You're starting a new factory. So it is not a day-to-day transaction. It is an investment which is going to give you a return for many years. You're starting, you are going to invest in a plant and machinery, or any other. If you're doing a investment which is expected to give you benefit for many, many years, that will not be a part of operating cash flows. That is a part of investment cash flows. Understood between the two, difference between the two, operating and investing cash flows?
Yes, sir.
A lot of time there is cash inflow and cash outflow because of financing reason. If I've taken a loan and bank has given me 10,000 or 10 lakh rupees, now my there will be a huge cash inflow of 10 lakhs. But that 10 lakhs is not because I've done anything great. I've taken loan. It's a liability which I've taken. So that has to be shown separately. If I club all cash flows together, you will not be able to make any assessment whether this company is doing good or not. If I see a company which is cash, operating cash flow is going down every year the operating cash flow is going down, but financing cash flow is going up. I can understand, right? Yes, company is getting a lot of cash, but it is getting a lot of cash not because it is doing good, it is able to sell its goods with its core operation, it is doing exceptional work in its core operation. No, the only reason they are getting a lot of cash is because they are raising a lot of loan. So that's not a good thing, right? So when the bifurcation is given, I can do the assessment whether the company is, uh, whether the firstly, whether company is cash rich or not, whether company is able to generate cash or not. And if it is able to generate a lot of cash, how is it generating? Is it through their core operation? Is it through their investment activities? Or is it through their financing activities? If a company sells its plant and machinery and there is a huge cash inflow, that is not sustainable, right? It cannot keep on selling its factory. Somewhere down the line, it has to generate cash flow from here, from operation. Another example is if I raise money by going to market and issuing equity. If I'm issuing equity, the company will get money. But that again is one time thing, right? You cannot keep raising money through equities every year. You have raised it one year, but it is not going to happen every year. Though equity money is not a liability, you don't have to pay back. But you have to understand, right, that this money is being raised through equity and it is not sustainable. It will be one-time thing. It is a one-time thing. Uh, Understood, guys? Why we have these bifurcation, operating, investment, investing, and financing cash flows?
Yes, sir.
Now, in all these statements, there are footnotes given. Footnotes are what there is a company will give you all the income statement. If you go through any uh, annual statements, you will find income statement, you will find balance sheet, you will find cash flow statement, you will find all these three reports. But there will be numbers given. This is our revenue, 1 million is our revenue, this is our expense, etc., etc. At the end, there will be some qualitative statements given, footnotes. What does the footnote says? The footnotes provide information like what are the accounting method used. Um, it provides additional information of how you derive this number. If the management wants to make a commentary about some of their revenues, like um, say example Titan will show revenue and then they will show expense. In the footnote, they can mention that 70% of the revenue has come from watches and 30% of the revenue has come from their eyewear business. It will provide some qualitative fe- uh, it will provide some qualitative commentary about the numbers. Okay, guys. If there is a huge expenditure this year, why there is a huge expenditure this year? Because there was a one-time expenditure this time, and that is why, or you can say that this year our expenses increased. They can provide footnotes, they can give additional commentary. Last year we had only 5 stores. This time we have 10 stores. Since our number of stores have increased, our salary expenditure have increased. That is why you see our expenditure going up. It will provide qualitative commentaries. It's been so just to give you a personal note, I was in one of my previous organization. I was looking at all the Canadian banks. I was going through the financial statements of all Canadian banks. Canadian banks are like RBC, Royal Bank of Canada, BMO, Bank of Montreal. I was going through all these things, all these banks. Bank of Montreal, which was the other bank? Toronto Domino Bank, these 5 banks I was going through. And every year before me, the people used to do financial statement analysis of these banks. But when I was going through these banks, I started looking at footnotes and I read footnotes. And without divulging much details, I cannot divulge much details about my previous work experience in a public platform because everything is proprietary. But because of my habit of reading footnotes, I was able to get some information and we were able to analyze all these Canadian banks far more thoroughly. We were able to bifurcate their revenue. This revenue is coming from here and this revenue is coming from here. And then we were able to assess which bank is doing how well in one particular revenue segment and in other particular revenue segment. So this is the information I just wanted to share with you guys. Okay. These are footnotes. So so let's go through one financial statement. I had chosen Titan only because it is a very basic, it's a consumer good, right? Everyone understands this company. So you can go through annual report of any company and you can check any listed company. You can go in Google and you can check their financial statements. Where is just a moment? Downloads. This is the annual report for 2021-22. The new report is not yet out. See, all these things are given: profit and loss, cash flow statement, balance sheet, all these things are given. If you want to check footnotes, you can check footnotes also everywhere. Just a moment, I'm not. You can check it yourself. Think there's some problem in my. Just a second, guys. So besides reports, beside all these things which I spoke about, income statement, balance sheet, let me stop my screen sharing 1 second. See, these are revenue from expenditure, everything. Have they mentioned any footnotes? No, in this case, there are no footnotes in this. But a lot of time, the example which I have mentioned, there were footnotes also. So just to go through the financial statements, you can see the index page over here. In this index page, all the things which we have studied starts from the second segment. Besides that, they give information about the company, what the company does, what are the key numbers, what is the profit, what is the loss, what are the division. There are different, because you have to do qualitative analysis also, right? You will not only directly look at profit and loss statement. You will first understand the business of the company, what business it is into. So now Titan is in the jewelry business. It sells jewelry also. It sells watches also, eyewear also. It started with fragrances also. It sells perfumes also. So it's in the this is the business. What is then they have mentioned about their intellectual capital, human capital, financial capital. A lot of companies are now do what are they every sustainability has become very important. What are they doing for their environment? How are they socially responsible, social and relationship capital? All these things are also mentioned over here. And then the most important thing, balance sheet, profit and loss, equity, cash flow statement, all these things are also important. Obviously important, which we have studied. Any questions?
Titan's inventory turnover ratio is like high, if I'm not wrong. Like they deal with gold.
So you cannot compare inventory turnover of Titan to say a fashion item, because it's a gold, it's a luxury item. So Titan jewelry inventory turnover will be compared to say Gitanjali or say some other jewelry operator. And if I'm not wrong, Titan inventory turnover is better, high, right? Faster, right? When you say high, means inventory is
Yes,
very good.
yes. Like during financial modeling course, there were a financial model on Titan itself. So there was some other calculation for that. So it's different. So I'm not able to get it again. So if possible, can you please just show and explain why it's high?
Yeah, so if, we cannot go much in depth in now over here, but what I'm trying to say is, what is your inventory turnover ratio? Can you tell me the ratio? What is the formula for inventory turnover?
COGS upon inventory.
COGS upon inventory. So what it's let's I do not want to digress the topic over here. COGS upon inventory is the this thing. Then inventory turnover ratio will be 365 upon inventory turnover, something of that sort. I have to brush up. So what moot point is, how fast are you able to sell your inventory? and Titan is one of the fastest in its segment in able to sell its inventory. If you keep your inventory too many days, number of inventory days is important, not inventory turnover. You have to look at number of inventory days, number of days of inventory, and how many days that inventory is stored. Now, I know for fashion items, Zara has the fastest inventory number, has the least number of your inventory turnover should be very high, and your number of days of inventory should be very low. So in Titan, the number of days of inventory is very low, right? That is what you're saying, right? Inventory.
Yes.
Yeah. So it is possible. You need to go through both the financial statements, but you have to have a fair comparison. Whom are you comparing Titan with?
Like it's fear. I think for me, like Titan is like in another level. I'm not able to compare with another gold companies. Like
Yeah.
they are, yeah, like if I have to compare Titan, मुझे किसी और से compare करना पड़ेगा क्योंकि
हाँ,
उसके peer में जो है वो competition में नहीं है Titan के. Titan market का ज़्यादा stake hold करता है.
हाँ, तो यही आप बोलोगे ना, यू विल कंपेयर टाइटन विद गीतांजलि. Whether obviously if Titan has high inventory turnover and if its number of days of inventory is less, it's good. Obviously, it's in another league of its own. But that doesn't mean you can compare inventory turnover of Titan with some other, say DMart, जो चावल बेचता है अपनी इन्वेंट्री का, उसका हर दिन चावल इज रीस्टॉक. एवरी डे द ग्रोसरी इज रीस्टॉक. Titan will not be able to restock its jewelry item every day. It will not sell jewelry like grocery, right? It's not possible because it's a luxury item. The margins are much higher. Understood, guys?
Yes, yes.
Yeah, let's not digress. What we are trying to, we are just touching upon all these things. So in when we do financial modeling, we have to stick to one company and we have to calculate all the ratios and we have to do our commentary. We will, we cannot do this in this session. This is just a foundation course. So MDA, but yeah, you can take my number also and you can call me also if you have any issues about it. So I'll just, you can note down my number. We'll just write it down over here. 9833574692. If you have any questions related to financial modeling or anything which I'm not be able to cover in today's topic, then you can call me, you can WhatsApp me and you can reach out to me. Okay, guys?
Okay.
Now, besides income statement, cash balance sheet, cash flow statement, there is another important session which needs to be given a lot of importance, that is management discussion and analysis. What does management discussion analysis does? In this session, see, income statement or balance sheet and ये सब तो mandated है. You will have to present it to your investor and you have to put it in your annual report. And this is not subjective. This is what it is. You have to follow the accounting principles and you have to prepare the income statement numbers. You have to prepare the balance sheet numbers. You have to prepare the cash flow statement numbers. This is not subjective. This is object. This is what you have to do. Besides that, there will be one section where the CEO or the key management is going to give some commentary about the business. It's like he's going to say if so in this case also, in this Titan example also, if you see, there will be,
Number of stores that they are going to open and all
yeah,
that.
correct. What is the number of stores they have opened? What do say? So just see on its invest letter from the managing director. So he is the managing director of Titan. Uh, he is going to say, give commentary. I would like to express my gratitude. That is okay. He's saying that Indians' GDP is increasing and their desire for lifestyle products will explode. So Titan is in the business of lifestyle, right? It is not in the business of grocery or anything. It is a business of lifestyle. So since the GDP is increasing, per capita is increasing, we will see this getting explode. We see a lot of growth happening in our business. See, it will give commentary if during the Ukraine-Russian war in 2022, management discussion analysis about oil companies, or was like, guys, there is war happening. So Reliance will say that there is war happening, but you don't have to worry. India is not getting affected, and we will say we have not, we are, it doesn't affect our day-to-day operations. There is obviously some volatility in our in our crude oil prices, but it is okay. It's little challenging. COVID ki time, all management discussion analysis was about this only. How are we challenging this tough period? Is it good or is it bad for us? For some people, it was very good. For technology company, COVID was very good because technology was not affected. In fact, technology was more adopted during COVID time. But if it's obviously, if you go 2 years back and if you go read the annual report of Titan, the management discussion analysis would be centered around COVID because no one was buying watches, stores were not open, jewelry, no one was buying jewelry, etc., etc. Understood, guys? It will provide some additional information where the business is going. If there is a lot of, if the revenue has fallen down, if profit has fallen down, management discussion will tell why the revenue has fallen down. How are we going to get the revenue back? If they have like company like Infosys, they will always give conservative management discussion analysis. They will say, uh, there are companies, see, this is subjective. It is management discussion analysis. The quality of management discussion analysis will depend upon the promoter or key management, um, how ethical they are. So Infosys is obviously very ethical. So it will never say that we are going to do this next year. We are going to have enough profit, huge profit. It will give conservative accounting. We see challenging next year. We do not think the revenue will grow, or we see only 5% revenue increase. So management discussion analysis gives you information, but it is very important that what is the quality of that discussion? What is the quality of that commentary? Is it good or bad? A lot of time you have to give importance to the person also who is speaking, whether he is ethical or not. You have to see his track record also. Okay, guys, any questions? Spoken for quite some time.
In CFA, do we learn financial modeling also? Like,
Yes, in level 2 in financial statement analysis there is financial modeling. In level 1 there is no financial modeling, but it is there in level 2.
okay.
Audit. Yeah, sorry, any questions? In the since you company prepares this income statement, cash flow statement, balance sheet, everything, but at the end of the day, that number has to be audited, right? The chartered accountant or the chartered accountancy firm has to say that the whatever number. Otherwise, I can show any revenue, any expenditure, anything, but someone has to audit it also. So there is an audit report. In the audit report, it will be mentioned whether the auditor will give a report and it will say if it is give its opinion. If it is an unqualified opinion means what? Whatever numbers which have been presented over here, they are true. There is no problem over here. Everything looks fine. It's an unqualified opinion. The management has presented this number to us and we think they are good and they are good to be shown in annual report. Sometimes the auditor gives a qualified opinion. Qualified opinion means what? The numbers more or less looks okay to me, but in certain cases there has been some exception. The revenue recognition has been little aggressive, or they have not followed certain consistency in their reporting. They are reporting their revenue little higher, I believe. Some places they have not followed all the prudent practices. And then there is adverse opinion. Adverse opinion means this number is not good at all. We do not believe. You take this number. If you are investing in this company, if you are lending this company, looking at these financial statements, it is very risky because we cannot confirm these numbers. They have not followed the accounting standards. Okay, guys. The auditing committee gets a report whether the number looks good, whether it's okay or whether it's adverse, it's bogus. The numbers doesn't look good. Recent example of unqualified report which comes to my mind, which was a recent report. I think Baiju gave a, for Baiju's there was a report that we do not believe that the numbers are good. It's not a listed company, but yeah, that's a name which comes to my mind. So even for Titan, there will be some report from auditor. Let's see. You have to go to the index page every time. Okay. So yeah, see, no independent auditor report. I think I've so whatever we are studying, we can see actually happening. So this is the report. Now the independent. We have audited a financial statement of Titan company which compromises, in our opinion, and to the best of our information and according to the explanation given, the aforesaid standalone given the aforesaid financial statement gives the information required. It gives the information required by Companies Act. So it's an unqualified report. See, there are certain in CFA they have mentioned qualified, unqualified, and adverse. But that in India we do not use this info. We do not say qualified, unqualified, and adverse. Statement gives the information required by the Companies Act. That means it has given a clean sheet. The numbers over here are as per Companies Act 2013. Okay, guys. Any questions?
No.
When you are doing financial statement analysis, there are certain 6 steps which you need to follow. One is these are, I mean, if you're doing a statement, if I'm doing financial statement analysis, there are 6 steps which I need to follow. State the objective and context. First is what is the objective of doing FSA, financial statement analysis? Are you doing it because you're an equity investor and you want to know whether I should invest or not? See, if I'm an equity investor, I will be more concerned about profitability. I would be more concerned about revenue, profitability, etc., right? So I will be more looking into revenue statement. If I am a debt, if I'm a banker and if I want to lend money to this company, for me, I would be more interested in what is the interest expenses, what is the debt level, what is the whether you are able to whether you are profit or not. That is not a concern for me. Even if you're less profitable, it's okay. But if you are able to pay interest cost, it's fine for me. If you are able to generate enough cash to pay my interest and pay back my principal, I'm okay. But if I am an equity investor, obviously I will look whether the company is able to pay its interest expense or not. But besides that, I will also look at the profitability of the company, right? Whether the company is making profit or not. So you have to state the objective, and accordingly you will do the essay, financial statement analysis. Then you will gather data. Obviously, you will gather data, income statement, balance sheet, etc., etc. Besides publicly available data, you will also go to the market. You will see, you will check if you are doing financial statement analysis of Titan. So besides Titan, you can also look at other company. You can gather data of Titan competitor, which one of our friends said that to get how everybody is saying Titan is good, how good it is. Let me check it compared to Gitanjali Gems. Let me check it compared to Vaman Hari Pete. There is another
Kalyan Jewelers.
Kalyan Jewelers. There is another company, Senco Gold, which is also doing very well. Senco. It is similar to Titan only, but it is not in Mumbai. It is in West Bengal, Bihar, to eastern part of India. So yeah, Gitanjali Gems, etc., etc. Uh, Besides competitor data, you will look at how good, because it is in the luxury market. You will see, in Google, if you find any report on luxury market, India luxury market is growing by 30%, 40%. So if this growth is happening, all this growth, whether Titan is capturing this growth or not, who is going to capture this growth? See, if an industry is growing, luxury market is growing by 30%. So someone has to capture this growth, right? Is Titan capturing this growth, or is Titan competitor capturing this growth, etc. Process the data. You have to process the data. You will have to, now, as our friend, one of our friends said, that he will do ratios, inventory turnover, everything will be processed. Once the numbers are out, he will analyze and interpret whether Titan inventory is turnover is better or not. Why it is, if the ratio says something, if the ratio says, as our friend said, that Titan is able to sell its inventory much more faster. Why is it able to sell its inventory much more faster? Probably because its store location is at prime location. They have very good salespersons. Their design and jewelry is very unique, and people like their design and jewelry, or people trust their gold and jewelry. People, if they want to buy gold item, they trust the Tata brand. That is why they are able to you will have to interpret the data. Why this data is showing what? Report the conclusion and recommendations. You will report whether the company is good or not. Company's Titan is probably good in jewelry business, but it is not good in perfume business. You will interpret, you will do recommendation also. And obviously every year, every quarter, you will update your analysis, because after every 90 days, the numbers are out. Quarterly numbers are out. And after every year, annual numbers are out. So you will update your analysis also. In balance sheet, you will see all these assets, cash and cash equivalent. These are all items which are expected to give you benefits. These are items which are expected to give you economic benefits, and you will see all these items over here. Cash, the most liquid one is cash and cash equivalent. Then accounts receivable. You have sold items to someone. If you have sold items to someone and if they have not paid cash back to you, they are accounts receivable. You are expected to receive money from them in future. Since you are expected to receive money from them in future, it's an asset. Inventory. If there is any inventory now in Titan showroom, there will be a lot of inventory. There are a lot of watches will be there. So it's an inventory. Some or the other day, this inventory will be sold and you will receive cash. There are other financial assets also. A lot of time a company invest in other companies. Now you must have heard, right? Microsoft has invested in OpenAI. They have some, no, that will be investment in affiliates. Suppose there is, you buy shares of, we all know, right? We can buy shares of Reliance, we can buy share of Infosys. Sometimes company also does, if they have extra cash left, they also buy marketable securities. They may buy shares of some company, small ownership, and or they may invest in some in bond also, in fixed income instrument also, because they have access cash. So these also are asset, rights, because they are expected to give revenue. When you sell that shares, you are going to get revenue, or you may also receive dividend income from those shares. So these are all financial assets, also are as recorded as assets in balance sheet. A lot of time there are expenditure which you do, and you do this expenditure in advance. I mean, you prepaid expense. Let me give you an example of prepaid expense. Now, you Suppose you have taken the internet subscription for the whole year. On the month of October, you have paid subscription for whole year. 2023, you have paid a subscription for till October 2024, and you have paid 3,000, or sorry, you have paid 5,000 rupees as internet. But when you are doing reporting for 31st December, you will say for this year, I have only paid for 3 months. Rest 9 months I've paid in advance, right? Because the after 2021 and 2024 to 30th October 2024, that is coming in next financial year. So I've paid the expenditure in advance. So in this year, I will report prepaid expenditure of 5,000 divided by 12 into how many months? 9 months. Because October, November, December, these 3 months only falls in this year. Rest of the year I'm already paying. I'm paying in advance. If I'm paying in advance, I call it prepaid expenses. Have you understood, guys? Prepaid expenditure. Since you have already paid in advance, it will be recorded as an asset, because next year in the month of Jan, Feb, March, you will be using the internet services, but you will be not be paying for those internet expenditure. Understood, guys? Have you understood or not?
Yes, sir. Yes.
Obviously, if you buy a plant, property, equipment, etc., it's a huge asset and it is expected to give you benefit. Reliance buys a factory in Jamnagar, so it's an asset for the company and it is expected to give revenue to you for a number of years. So that is also an asset. Anything which is going to give you economic benefit will be considered as assets. Investment in affiliates. Now, if I have spare 50,000 rupees and if I've invested that in Infosys shares, if my company, that is investment in financial assets, it's just 50,000. It's not 50,000. You will not have any, it's not that you will get a membership, a board membership in Infosys. Mr. Narayan Murthy will call you up. If there is anything important happening in Infosys, you will be asked for advice. Nothing of that sort will happen. So you're a small investor. But when MSFT, Microsoft, takes ownership in OpenAI, it is the biggest shareholder in OpenAI. So that is not considered as investment in financial asset. It is considered investment in affiliates, because you Microsoft has huge ownership in OpenAI. One of their board, OpenAI, there will be a board members. So one of them probably will be from Microsoft. So it has decision making power. It can say whether what we should do in AI, whether we should adopt this technology, whether we should take these semiconductors from this country, etc., etc. So you have a huge say in the company. So if you have a huge say in the company, then it's not a financial asset, it's an investment in affiliate. OpenAI is almost an affiliate for MSFT. Okay, guys? Uh, Deferred tax assets. Sometimes deferred tax assets, like you have paid more tax than you should have. That is why there is some, these are, it's like a almost, think of it, it's not prepaid tax expense. You have not prepaid tax expenditure, but you have paid more than what was required. Since you have paid more this time and you are expected to pay less next year, it's an asset for you, right? Because think of it as a prepaid expenditure only. We will go through deferred tax assets later when we study CFA also. It's a huge topic, but think of it as something which you have paid more in advance right now. Since and in the name itself you can understand, right? It's an asset, deferred tax asset. It is expected to give you benefit in future. And there is obviously intangible asset also. There's a lot of iPhone, a lot of technology company, they will do research and development, and they will make another type of phone which is foldable, or which can do something which no other company is doing. So since this is an so they make a phone which is foldable. So they make a patent out of that technology so that no one is able to replicate that technology. Since this is an asset for the company, right? They have made a lot of expenditure, but now they will be able to sell many phones, and none of their competitors will be able to sell this phone. So just a moment, guys. So if you have any intangible asset in your book, something like trademark, patents, you have trademark also, right? You make your own company and then you start a company. Today I've started Titan. Titan has its own trademark. I cannot start my own store and put Titan on the billboard. I have to give some other name. It has its own trademarks. Otherwise, everyone will open their showroom and put Titan outside it. People will think that we are buying from Titan. No, but that is not the case. I'm not allowed to do it. It is a certain trademark, and you cannot copy that trademark. Okay, guys. These are intangible assets which are expected to give you benefit on the long term in future. Any questions? Similarly, we have liabilities also, accounts payable. If you have purchased goods from someone and you have not made the payment, that means you have to make the payment in future. If you have to make payment in future, it will come as accounts trades payable. Like we have trades receivables, opposite is trade payable. Trades receivable is a current assets, and trade payable is current liabilities. We have other financial liabilities also. We have to pay income taxes, long-term debt, deferred tax liabilities. These are all things which is going to remove money from our pocket. If it is expected to remove money from our pocket, it's a liability for us. Okay, guys? See, there is one form before we let's go through all these liabilities, income statement in thoroughly again. But before that, let's understand this thing. This formula which we studied, asset is equal to liabilities plus owner's equity. We have studied income statement and we have studied balance sheet. There is a link between the two. So let me give you a format of income statement and balance sheet. In short, if I want to give you income statement, there will be revenue minus expenditure, everything. In the end of that, there will be profit after tax, x amount, say 500. So this 500, after you have paid interest and everything, this 500 profit after tax will go to balance sheet in the end. In the balance sheet, what is there? There is assets, there is liabilities plus owner's equity. This 500 will go in this equity section of balance sheet. Okay, guys? So when your profit increases, your equity also increases. Equity is not only your paid up capital, it is also your retained earnings. Retained earnings are those earnings which you have taken from income statement. Any confusion? No questions, guys? Guys, please answer.
No, sir, no confusion.
So let's understand this double entry system. Asset is equal to liabilities plus owner's equity. Purchase equipment for 10,000 cash. If you are purchasing equipment for 10,000 cash, what will happen? Your cash will decrease by 10,000. You're purchasing it for cash, right? So your cash will decrease by 10,000, and even your earnings, retained earnings may, because your expenditure is increasing by 10,000, even your retained earnings and even your equity will go down by 10,000. So this equation will remain intact. Left hand side is decreasing by 10,000, right hand side is also decreasing by 10,000. Understood? Borrow
Yes.
10,000 to purchase equipment. Now, if you have borrowed 10,000 to purchase an equipment, one second, guys. Just a second, guys. So first you have borrowed money. So if you have borrowed money, what will happen? Your cash will go up by 10,000 because you have borrowed money, right? And your liability will also increase by 10,000. This equation will remain intact. Now we are saying that you have borrowed this money to purchase equipment. This is the first step. Second step, you have purchased an equipment. Now your cash will go down by 10,000 and your machinery equipment will go up by 10,000. It will remain the same. Cash and money will go out of cash will go out and equipment will come in. And in second equation, what will happen? Because you have purchased, your expenditure will increase something. No, in this, if it is capitalized asset, your nothing will happen to the right hand side. Only your cash will go down by 10,000 and your plant and machinery again will go up by 10,000. So it is zero impact at the end of the day. Understood, guys? This equation is, sorry, my screen has gone blacked out. Yeah, this equation will always remain intact. Any business transaction. Any questions?
No, no question.
My screen is blacking out. Just give me 2 minutes, guys. Yeah. Buy office supply for 100 cash. Very simple.
Sir, can you please repeat why it would remain the same? I couldn't get it.
Yeah. Asset is equal to liabilities plus owner's equity. So first you borrow 10,000. If you're borrowing 10,000, what will happen?
So 10,000 चले जाएंगे सर, liability हो
Cash
जाएंगे ना
will go down by cash will go up by 10,000. No? You have borrowed, no?
अच्छा, I've borrowed. Okay, I've
Yeah,
not
you have
purchased.
bought. Yeah. And you have purchased an equipment. So first, so you will get 10,000 and your liability will also go up by 10,000 because you have borrowed, right? It's a
Yes,
loan.
sir.
Okay, so this is the first step. Now,
Okay.
second step, you spend that money on asset. So your cash will go down by 10,000.
Yes, sir.
Your fixed asset will also go up by 10,000. Again, this equation, net impact is zero, right? Nothing is happening in the right hand side, but
Yes,
nothing is
sir.
happening on the left hand side also.
Yes,
Impact
sir.
is zero only. So this equation will always remain intact. Okay.
Okay, sir. Okay, thank you, sir.
Buy inventory for 8,000 cash and sell it. Sorry. Just a second. Can you hear me? Am I audible?
Yes, sir. But the screen is still black.
Yeah, just a second. Let me just join in the Zoom again. I think I've pressed some wrong keys by mistake. You guys stay in the class. I'll just join again. Okay.
Yes, sir.
Okay, sure.
KJL. हैंग हो गया करते करते. Okay, guys, I'm on. Just give me 1 minute. Yeah, where were we? Guys, do you remember what we were talking about?
Assets and liability.
Mhm.
Double entry bookkeeping, I guess.
Yeah. Okay, guys. So this, as I said, the equation will always remain true. Asset is equal to liabilities plus equity. Buy inventory for 8,000. So if you buy inventory for 8,000, what will happen? Your cash will go down by 8,000, but your inventory also will go by up 8,000. So left hand side, there is no change. Right hand side, there is no change. Everything is same. Now you sell that 8,000 cash, you sell that inventory for a profit of 2,000, 10,000. Then what will happen? Asset is equal to liabilities plus owner equity. One of you guys tell me now what will happen.
Can you please repeat?
So first thing you understood, buy inventory for 8,000. It will remain the same. Your asset will increase, your inventory will increase by 8,000 and your cash will go down by 8,000. Agreed?
Yes.
Now I am asking you, you sold that inventory for 10,000. What will be the effect left hand side and right hand side?
Asset will cash will increase
By how much?
2,000.
Your cash will increase by 10,000. No, now you sold the inventory, right?
Okay, sorry, I just bought for 8,000. I just calculated the profit, sorry.
Yeah, no, your asset, don't calculate the profit, just calculate the total cash. Your asset will increase by 10,000. Your cash will increase by 10,000 and your inventory of 8,000 will go down, right? You have to remove it from your book. So total asset will increase by 2,000. Now you are in your income statement also there will be a 2,000 rupees profit, right? Your revenue will go up by 10,000 and your expense will be cost of goods sold will be 8,000. 2,000, since 2,000 is your profit, retained earnings, it will be part of equity also, right? Your equity will also go up by 2,000. Agreed or not?
Agreed.
You take any financial transaction, this equation has to remain same. If it is not, if you are only adding assets, if you are only increasing assets and you are not doing anything over here, your books will not match and you are not following accounting principles. Accrual basis of accounting, even accrual basis of, we have studied what is accrual basis of accounting, right? Even this follows this thing only, double entry system only. Unearned revenue. What is unearned revenue? Revenue which you have not earned. You have received the payment. Take example of Tata only, Tata Internet Connection. I have received the payment. I am Tata company and I have received the payment for 12 months. But for this financial year, I have only received for 3 months. For next financial year, 9 months I have received already now. So that will be for Tata, that will be unearned revenue. Understood or not? Lot of time. You understood this unearned revenue concept, or do you want me to go in detail? If I am if I have an internet company and I give yearly subscription, in 1st October, I have received 5,000 as revenue for 12 months. 12 months खत्म हो रहे, पर ये साल में तो there are only 3 months left. So for this year financial accounting order, I will say I have received unearned revenue, something which I have not yet earned. I have received the cash, but 5,000 is for whole year. But I have received for this year, I have only received for 3 months. For 9 months, the revenue is for unearned revenue. It is for next year. So 5,000 divided by 12 into 9 will be my unearned revenue. Understood, guys?
Yes.
Accrued revenue. Accrued revenue is when I've sold the goods to you, but I have not received payment. Even if I have not received payment, I will say, right, it's an accrued revenue. In my pen example, I had sold 20 pens for 100 rupees. I have received payment for only 15 pens, but I will still record the 5 pen revenue also. I will record it. It will be accrued revenue. Prepaid expense, similar something expenditure. I have done an expenditure, and so if I was a
I
Tata
took
company,
1 year I took 1 year like internet service from you. That
yes,
is prepaid.
unearned revenue will be for Tata company, and prepaid expense will be, so that is a liability unearned revenue for Tata company, because it is still not earned. It's not an asset. I'm sorry, it's a liability for Tata. For me, it's an asset. It's a prepaid asset. Okay, guys. Accrued revenue. Accrued revenue is something I have earned the revenue and I am expected to receive in future, which will be reported in income statement. And prepaid expenses, sorry, accrued expenses, something I have, in my pen example, I have made payment of only 15 pence, but I will still report whole 20 rupees pen ka payment at 50 rupees. Though I have only made 15 ka payment, that 5 will be accrued expense. I will still report it in my income statement. Even all these things is going to follow the basic principle of all these transactions which we have studied over here. They will also follow this thing: asset is equal to liabilities plus owner's equity. All these accounting entries will follow the principle of accrual basis of all these accrual basis of accounting will follow the principle of asset is equal to liabilities plus owner equity. Okay, guys.
Okay.
So this is an income statement, a pro forma of income statement. This is sales minus expense. Expense are divided. It is if sales is, if I'm a pen manufacturing company and I've sold pens, so this will be recorded in sales. Now expenditure case, how will be the expenditure? One will be the cost of goods sold. In preparing that pen, I had to buy steel, I had to buy plastic, I had to uh, rent a factory, I had to pay for electricity, etc., etc. All these expenditure which are directly involved in the manufacturing of pen will be cost of goods sold. And obviously, in my factory, there will be workers also. So I'll have to pay wages also. A lot of time wages are included in cost of goods sold. Sometimes they are shown separately. It's up to the company whether they want to show it separately or whether they want to include it in cost of goods sold, because it is part of manufacturing, right? Wages is also, wages you have to pay to factory owner. If you have to pay to factory owner, it is part of your this thing, cost of goods sold. But they have shown it separately. It's okay. Now, besides this cash expenditure, there will be this thing also. There will be non-cash expenditure also. Now, to start this factory, I have made an investment of say 70,000. I've made an investment. I've bought a factory. I've bought plant and machinery at 70,000. But I cannot expend that. I cannot put it in income statement. I have to amortize, I have to, every year I have to allocate some amount. So what I say, I will allocate, since this factory is going to last for 10 years, every year I will allocate 7,000 as depreciation. So every year for 10 years, if I do depreciation, I will able to expense my whole factory expenditure of 70,000. Understand, guys? Factory, if you are doing an expenditure to buy the factory, you cannot expense it in 1 year. You have to depreciate the amount because the factory is going to last for 10 years. You have done estimation that this factory is going to last for 10 years. So you will depreciate the amount over here. So there will be depreciation deducted. Then there is, this is a non-cash because 7,000 is not literally going out of your pocket. 7,000 is going because the life of the factory is decreasing every year. Then there is interest expense. You have taken a loan and you have to pay interest also. You add up and you get total expense 52,500. This is your revenue. This is your total expense 52,500. This minus this you get 47,500. This is income from continued operation from your daily core operations. Apart from that, there was a sale of land also. You sold a land, but you are not in the business of buying or selling land. In this buy land transaction, you bought the land at 50,000 and you sold the land at 60,000. If you bought it at 50,000 and you sold it at 60,000, there is a 10,000 gain, right? So this will also be shown separately. It should not be shown as sales because that is not your core business. This is your peripheral business activity. This is so this will be part of your pre-tax income, 57,500. Then you have to pay taxes. After you have paid taxes, you will get to net income, 37,500. And after that, you have to give, not necessarily all the income will be given, will be distributed as dividends. Company says that I do not want to distribute everything as dividend because I want to keep money for myself because I want to grow business also. Company doesn't distribute the dividend, complete 100% dividend all the time. If they believe that we can keep the money for ourselves because we can fund our business also, this money will be useful for us. We will give 8,500 to our shareholders, but the remaining money we'll keep it in the business. We'll keep it with ourselves. In that case, your net income will be very high, but your dividend will be little less compared to your net income. Okay, so 37,500 minus 8,500, whatever is the money left, that will be going to retained earnings. Though you have not given it to equity shareholder, it still belongs to equity shareholder. It will be part of retained earnings. Okay, guys?
Okay. Can you please elaborate on like direct expenses and indirect expenses?
Sorry, direct expenses and indirect, what are the indirect expenses which I spoke about?
Some no, like in income statement there are some like I know that there are some direct expenses and like indirect expenses also. So uh, can you please explain that if possible?
So I'll
What
show
are
you
the like
another,
direct or indirect?
I'll show you another perform of income statement which is far more elaborate. Multi-step income statement. So this is cost of goods sold. So you're talking about this thing. See, over here, this
Yes,
is
yes.
far more in depth. This is cost of goods sold. So you're in the pen manufacturing business. So revenue is recorded over here. Then cost of goods sold. Cost of goods sold will all include all the expenditure which is directly related to in manufacturing pen, which is factory, rent, wages. Okay. But besides all these things, there will be, these are indirectly related to your business. So obviously there will be factory, but there will be office also, right? You will have an office you will have sales team also, which will not be sitting in factory. You will have an HR team, IT team. They will not be sitting in factories. They will be sitting in office. And these are selling, general and administrative expenses. So this will be shown separately. This is cost of goods sold. It is directly involved in producing that pen and this is SGA. SGA is those expenditures which are not directly involved in manufacturing the pen, but still they are also important and they are also an expense, right? You will have to pay money to your HR team, you have to pay money to your IT team, you have to pay money to your office people, sales people, etc., etc. When you depreciate, and then obviously there is depreciation expense. After that, you get operating expense profit. Once you get operating profit, your banker will be looking at operating profit very closely, because a banker says that I have to take money from it as interest. My return is interest. So I have to make sure that operating profit is good. Operating profit minus interest expense will be income before tax. Then there is provision for taxes. There will be income from continued operation. Plus, in this case, income from discontinued operation net of taxes, gain or sale from land or anything, it is shown separately, because I am more concerned if I am looking at, if I want an equity investor of the company, I am more concerned with income from continued operations. This gain and sale of land, from this gain and loss from discontinued operations, like something which has been discontinued, it's no longer part of core business operation, they have discontinued it. Something like Bajaj. Now Bajaj has discontinued selling scooter. They are only selling bikes. But they had couple of scooters left and they have sold that off at scrap value or something. So this is not their core business anymore, right? They have discontinued their operations. They are now in the business of making bikes. So I will be more concerned as an equity investor looking at this number, income from continued operations, rather than this number, because this number is not a recurring item now. We are no longer in the business of scooter. Okay, guys.
Understood.
So this is income statement. This was our first session on foundation of CFA foundation course. We will cover more topics as we go further. Any question till now? We'll end the session for today.
No questions, sir. Thank you.
Thank you, guys. If you have any
No,
query,
sir, how many sessions will be there, sir?
6.
Okay,
Yeah.
sir. Thank you, sir. On only FSA or different subjects, sir?
A whole if we give you only FSA, you will not get the snapshot of full CFA foundation, CFA, no?
Yes, sir.
So
That
we
is
will
why I'm
try to, we will try to cover other things also.
Okay, sir. Thank you.
Okay, but FSA has a major contribution for CFA level 1. So it's good to have a first session on FSA. Okay, guys.
Okay, sir. Thank you.
Sunday well spent. Best way to spend Sunday evening is studying FSA. So okay, guys, if you have any query, just WhatsApp me. Please don't call me up, WhatsApp me, and when I'm free, I will give you a call.
Thank you, sir.
Thank you, sir.
Thank you.